Well, to put the events of the last few days in perspective, we're joined now in the studio by global risk analyst Satyajit Das. Satyajit Das, welcome to the program.
It's nice to be here.
It's a pretty extraordinary turnaround on the markets today, certainly in Australia, but we have to point out that, of course, Asia didn't share that turnaround. London's proving pretty choppy. Do you think that local markets had a temporary reprieve today?
I think it's very difficult to tell under these circumstances. I think we'll be able to make an assessment over the next month, but not over the next few days. The simple reason is the market is trading on rumour. People are speculating about a quantitative easing, which is really printing money by the states. There are rumours of big liquidations, of people selling, people buying. So there's not much information. And it's summer months, which are traditionally slow months. People are away. So it's pretty difficult at the moment.
Well, that rumour about more quantitative easing, more stimulus from the US Federal Reserve was certainly a big help today. Do you think it will come to pass?
I think it's difficult to know what the Fed will do, simply because they have to balance two things, which is inflationary pressures, which they've identified. They've basically said they're going onto a tightening bias, which is they were looking to increase interest rates. I think what we would see today is some words that the risks are on the downside. They will have to do certain things. So under those circumstances, they will put some sort of bottom or try to see what happens. I would be extremely surprised if they suddenly launched quantitative easing immediately. I think that's on the table, but I don't think they'll be reaching for the fire extinguisher just yet.
In other words, things have not got that bad?
Oh, I think things are pretty dicey, but I think the fundamental thing is quantitative easing has been tried twice. It didn't really work. And I think the Fed is very, very concerned that their credibility, if they keep doing this, and the fact that really it may not work, doesn't really help. And I think they are also coming to realize that there are two fundamental issues which are underpinning this market. And I don't think it's the US downgrading. It's a re-evaluation, I think, of two things. Where growth will settle, which in my view will be much lower. And the second thing, there's a tremendous crisis in the credibility of the authorities, who for 3 years have been telling us that they've done everything, everything's going back to normal, and it's not. And to get over that, quantitative easing does not really help. And there's almost a whiff of panic now if they do that. And they're going to be pretty cautious not to put that into the market.
You'd have to say that that credibility problem also exists definitely with Europe. So if you put Europe there and then you put the US there, where do we go from here? We've had a couple of days of extraordinary movements on the share market. Are we in for more of them?
I think we're going to see enormous volatility. I mean, Benjamin Graham, which is Warren Buffett's mentor, once said in the short term, the stock market is a voting machine. And we're seeing people vote by selling at the moment, but for every seller there's a buyer. In the long term, it's a weighing machine. So if somebody owns stocks, fundamentally the company hasn't changed in the last week. The dividend stream probably hasn't changed significantly. But if you want to realize that investment today, clearly you're going to get less. So to a large extent, it depends on what people actually are going to do at the moment. But the uncertainty, like we saw the Australian stock market, people forget, it went down 5, up 7. So it's a 12% move. And it's very difficult for anybody to make a rational decision under those circumstances.
So what, best advice, sit tight?
Well, I think it depends on your circumstances. You can't be general. But I think overall, I think people are a little bit gun-shy at the moment and they're frozen. And that's reflected in the fact that we've seen big accounts just sit there doing very little at the moment, trying to gauge what's going to go on.
And that makes it even more volatile, of course.
Absolutely. And one of the things is what we've seen is the weak holders of stocks and so forth fall by the wayside. Anybody who has leverage, who's borrowed against their stocks, having to liquidate. And we're still seeing that go through. And that's got quite a few days to go through, particularly if the market trends lower.
Do you see any likelihood that the Reserve Bank will cut official interest rates? We saw some changes today in fixed rate home loans, but any chance the Reserve will actually hit that panic button?
I would expect them to just keep things on hold. I think they've got a fair bit of firepower because interest rates here are not at zero as they are in the United States or in other places. So I think what I expect them to do is to do very little, to sit on their hands, just to assess how this plays out, knowing full well that they can intervene if they want to. Also, the government here has some capacity because we don't have the levels of public debt. They could do certain things. So I think their concern at the moment is the markets are fairly orderly. They're obviously going down, but they're orderly. There hasn't been disorderly trading yet. So they wouldn't, I think, feel obliged to intervene because, again, it would suggest to them, the market, and to anybody watching them, that they themselves are infected by the panic.
So just finally, are you confident that these debt issues in the US and in Europe will be fixed without another major global crisis?
Oh, I'm not confident at all. I mean, the Europeans, particularly the leadership in Europe, has shown no capacity to understand the problems, let alone come up with any sort of cure. I mean, the basic thing in Europe in particular is you see dueling between Angela Merkel, Nicolas Sarkozy on the one side, and also Manuel Barros, who's the head of the European Union. And they're openly at loggerheads. The ECB is at loggerheads with the European Union, and we saw the bun fight in Congress over the debt ceiling. So we have absolutely no agreement between the body politic, and I'm not confident that they will not make a miscalculation of large proportions.
So volatility might look good in comparison to what might be to come.
Well, let's hope not, but I think you cannot discount further volatility going forward.
Satyajit Das, many thanks for joining us.
It's my pleasure, Ali.